Welcome to the Personal CFO. Today we're going to be talking about investing in technology companies, in particular the technology companies that everyone is excited about when you're dealing with AI or ChatGPT or any of these buzzwords that's leading to certain companies trading at what otherwise be pretty expensive valuations. Or said another way, if I'm looking at the future cash flows of these companies, people are willing to pay a lot. And the question is, well, maybe these companies are just going to grow at such a pace that the price we pay doesn't really matter because they're going to grow into it and they're going to be huge, and I just need to buy the company and I need to just get in. And we're going to look back at history and see, have these things ever happened before? Yes, they have. And how has that played out for companies that are expensive? Can they actually grow their way into the price that people are willing to pay when they do get expensive? And this chart here gives us a good indication of that. So this goes back over time and looks at, use price to sales as a number. And so what does that mean, price to sales? It means for every dollar in sales a company has, how much are you willing to pay per dollar in sales? Now, this is different than what sometimes you've heard of as price to earnings, which means how much money does the company actually make? With price to sales, what you can have is you can have sales for a company, but no profits. In other words, they're selling stuff, they're just not actually making any money. And people are still willing to pay under the assumption or under the thought that they're going to buy this company at whatever price, turns out pretty expensive, but it's going to grow so fast that it will become profitable over time, and then I will do well. And what this is looking at is, well, what is the likelihood that over short periods of time like 1 year or over longer periods of time, what is the likelihood of beating just the market? So this is not some difficult to beat index. It's just a broad market. How do expensive companies that people are anticipating are going to do great, how do they do over time? And if you look at the 1 year number, right, how likely are expensive companies likely to outperform? Well, it's around 20-ish%. Let's call it a quarter. So around 25% of the time, overpaying or paying a lot for high growth companies or what people think are going to be high growth, sometimes it works out. Around 25% of the time, they actually do better than the market. Now, what does that mean? Well, it means 3 out of 4 times they're going to underperform the market. And so I'm just giving the benefit of the doubt and saying it's not horribly unlikely in the short term that it might do okay because people are still willing to pay more. Just because something's expensive 1 year doesn't mean it can't get more expensive the next year. But what happens as we look over time? Well, these numbers go from around 20% and they start to drop pretty dramatically the longer the timeline is. And what does that mean? It means when you're paying a lot for companies that aren't necessarily profitable, the likelihood of them outperforming or beating just your broad market gets to be very small or under 10%. And so overpaying for investments, while it's not impossible that they could do really well and they could grow out of it and become profitable and become good investments, it is highly unlikely, based on history, that this is a strategy that is prudent to follow. So unless you know something that other people don't, which is also pretty unlikely because there's a lot of smart people that are trying to do well in the markets, history has shown us, based on the chart we just looked at, that while in the short term you have a pretty bad chance, in the long term you have a really bad chance of overpaying for investments in the hope that they will kind of work themselves through it. And so as a long-term investor, as I always say, it's important to understand what you own and why you own it. I hope you found this helpful. And as always, thanks for investing your time with the Personal CFO.